Hi, I'm Carmen from On the Money Bookkeeping and welcome to our Business Academy. I'm a qualified accountant, registered BAS agent and fellow member of the Institute of Certified Bookkeepers, and I'm here to help answer many of your bookkeeping and business questions. So, let's get started. Welcome to our next video in our Business Academy series. Today we're going to talk about cash versus accrual reporting. This is something that many business owners tell me they don't understand. So what is the difference and why does it matter to your business? First, very briefly, I'm going to explain cash reporting. Now this is the most popular method for reporting GST. With accruals reporting, this is typically the most popular method for preparing financial statements and tax returns. So I'm going to go back and explain why cash reporting is so popular for GST. With your typical business, they are actually receiving income from their sales much later than they are actually issuing the invoice. So let's take the example that we have on the screen. The invoice date of this invoice is in one financial quarter, but the payment that's applied to this invoice is in the subsequent financial quarter. What we have here is a situation where the payment date on a cash basis is what is driving your reporting. So if we prepare a BAS on a cash basis, we are not having to submit or pay that GST on that sale to the ATO in that initial quarter when the invoice is issued, but rather in the subsequent quarter when it was paid. This is great for cash flow. So if you're a business that issues invoices and needs to wait for money to come in later on, it helps you with your cash flow because you can stall that payment of GST. Ultimately, cash and accrual both mean the same thing in the long term. It's merely a timing difference based on when things are paid. It applies both on the sales side of a transaction or in your ledger and also on the purchaser's side. If we take the accruals example, you can also use that one to report your GST, but typically it's more common for your financial statements and your tax return. So if we use a similar example, you might report GST on an accruals basis. If you are purchasing a lot of inventory up front and you're having to sit on that inventory until the money comes in. So in that situation, money has flown out of your bank account, you've spent money on GST because it's connected to your purchases, but the offsetting GST on income hasn't yet flown into the business because you haven't yet sold those goods. In this situation, a business would be better off reporting their GST on an accruals basis. Businesses have the option of using the same method for both their GST or their activity statement reporting and income tax reporting, or different methods. Most small businesses today are reporting activity statements on cash and their financial statements and income tax returns on an accruals basis. So from an accounting and bookkeeping perspective, many people believe that reporting GST on an accruals basis is easier to get right. The reason being is when you post that manual journal for your activity statement at the end of the quarter, presuming that you are reporting on a quarterly basis, then your GST account on your balance sheet will be zero. If, however, you are reporting your GST on a cash basis, then when you post your journal for your BAS at the end of the quarter, it is actually not going to be zero. And that is because you still have GST either collected or paid where the money hasn't flown in or out of the bank account yet. It can be resolved by running a report of your balance sheet on a cash basis, but not all accounting packages allow you to do so. It's a good idea to get it right from the beginning based on your business and what would benefit you from a cash flow perspective. And the examples that I cited earlier would help a business make that decision. However, there are situations where you may have either selected the wrong method and need to switch for cash flow purposes because your business is still in its infancy and cash flow is so important. The other reason is perhaps because you've reached a turnover of $10 million or more per year, and at that point, reporting GST on an accruals basis becomes mandatory. So what's the impact on your profit and loss and BAS? Well, we showed an example at the beginning of this video where we had a sales transaction. So that is an invoice to your customer, which showed one invoice date and one payment date that were in 2 different financial quarters. So up on the screen, we're now going to show you how your profit and loss statement looks. One is on an accruals basis, which is driven by that invoice date, and another profit and loss statement, which is on a cash basis. So that payment date on that invoice is what drives your reporting. An accruals basis profit and loss report, income associated with that invoice has disappeared. It has merely moved into another period because of the method that you're using to report. So why is it that your BAS is perhaps on a cash basis and your tax return on an accruals basis? As I mentioned before, BASs are typically done on a cash basis because for the vast majority of businesses, that improves cash flow and helps your business survive. Please refer to the article in the description box of this video for more information. Remember, like, share and subscribe so that you're notified when our next video goes live next month.